Ethereum just flipped a major switch and Solana is not far behind. Institutional money is folding in, ETFs are booming, and the new era of crypto dominance is quietly unfolding. In today's video, we're breaking down what exactly is happening with Ethereum ETF's momentum, Solana's rise, and how Bitcoin fits in this new structure. So, let's get into it. Bitcoin's ETF launch in early 2024 was the big moment, but in 2025, Ethereum's spotlight arrived. After the SEC approved spot Ethereum ETFs mid-year, demand exploded. By December, over 11 billion had flowed into the Ethereum ETFs. That's not just price speculation, those funds had to actually buy Ethereum, taking it off the market. At the same time, Ethereum staking continues to grow. With over 36 million Ethereums locked up, that's almost 30% of the supply. Combine that with AIP 1559's burn mechanism, supply is shrinking fast. Institutions aren't just buying, they are holding. One fund linked to Peter Thiel acquired over 160,000 Ethereums and called Ethereum digital gold that yields. And they are not wrong. With 3 to 4% staking reward, Ethereum has become more than a growth play. It's a year-bearing financial asset. Ethereum is no longer a tech token, it's a piece of a new financial system. Now, here's what most people didn't see coming. In October 2025, Solana ETFs were approved in the US. Funds like Bitfine's BCOL launched and started attracting hundreds of millions. And this wasn't just retail hype. Daily inflows were led by institutions looking to front-run the next Ethereum-style run. On-chains, Whale moved fast. One wallet stacked 761,000 Solanas, over $100 million, while reports showed that institutions bought up to over 15 million Solanas across Q3 and Q4. Solana staking yields are higher than Ethereum's, hovering around 7 to 8%, and its network isn't just hype. More than $11 billion in DeFi TVL, more than 14 billion in stablecoins, massive growth in gaming and NFTs, it's fast, it's cheap, and now it's institutionalized. Bitcoin still dominates, with a $1.3 trillion market cap and the largest ETF inflow to date, but now it's a part of a wider crypto asset class. In November 2025, while BTC ETFs saw modest outflows, Ethereum and Solana ETFs gained over $900 million. A clear signal, capital is rotating. This isn't bad for Bitcoin, it's a sign that crypto is maturing, from one asset exposure to portfolio diversification. Investors are now building multi-asset strategies, and that makes the whole market more resilient. The SEC has opened the door and there's no going back. Over 150 new ETFs filling are now pending, including the Polygon, XRP and even crypto index products. With new generic listing rules, approvals may come faster than expected. We're watching the early stage of crypto finance merger and it's moving quicker than anyone thought. Now, here's the summary. Ethereum is evolving into a yield-based institutional backed asset, Solana is rising fast with real usage and ETF fuels, Bitcoin remains dominant but no longer stands alone, institutional crypto is no longer a trend, it's becoming the base layer of the new financial system. Whether you're an Ethereum bull, a Solana believer, or just observing, the market is clearly shifting. This is no longer about tech or hype, it's about structure, capital, or control. If this helped you see through the noise, hit that like and drop me down in the comments below which asset are you watching more, Ethereum or Solana. And also don't forget to subscribe to Crypteria for grounded, hype-free crypto insights. Thank you guys for watching and I will see you in the next video.